So let's talk about Thor Industries. And they are the biggest manufacturer of RVs in the world. And just recently, they invested $15 million in a company called Dragonfly. And that's a leading producer of batteries for RVs. And this is a next step for Thor to actually control the whole manufacturing process, to control all the companies that create different parts that are needed for the RVs. And recently the price of shares of Thor went up around 7.5%. And the reason for that is that they announced their earnings for the third fiscal quarter of 2022, and the earnings per share were $6.32, and the estimate for that quarter was around $5, actually just below $5. And also, if we look at the earnings per share year to year, it was up 92%. So the company seems to be doing really well financially. But let's dig in and see, is it a buy at the current price? So, first of all, investors. Who is invested in this company? So, insider buys? Yeah, that's a check. There are a lot of directors that are buying the stock of the company right now. And what about super investors? Well, that's a check, but actually there is just one company that is included in this group of super investors, and they invested last quarter into Thor Industries, but it's only 0.45% of their current portfolio. So this is not really a significant investment. Okay. So what about the fundamentals? Well, return on invested capital, that's a check because it's 18.3%. So that's really nice. What we are looking for is a return on invested capital above 10%. What about free cash flow growth? That's also a check. It's 17.2%. Also very nice. What about shares buyback? That's an X. And actually in the last 10 years, they issued some shares that was around 3.7% more shares. So we're losing value there, but not a lot. Like when you look at the big scale of 10 years, that's not that much. And what about dividend yield? Yeah, they're paying a dividend and the dividend yield is 2.1%. So a pretty decent dividend yield. And what about the debt of the company? That's an X. And actually it's quite a substantial problem because it would take them 4 years with a current free cash flow to pay back the debt that they currently have. So there is an issue with that and with issuing extra shares. Other than that, the company looks quite healthy. Okay, so let's see the price to earnings of this company. The current PE is 4.17, so really low PE if we compare it to an average PE at the market right now. But let's compare it to a 5-year average PE of Thor Industries. And that's a check because the 5-year average PE was almost 16. And what about a PEGI ratio, which is PE divided by revenue growth plus dividend yield. So revenue growth is 18.1%, really impressive. Dividend yield is 2.1%. So if we divide the current PE, which is 4.17, by revenue growth with dividend yield, well, of course, that's a check, and it's a massive check because what we are looking for is a number below 1. And the PEGI ratio for Thor Industries right now is 0.2. So that's really, really good. It seems at the moment that this company is really, really cheap. But let's do a discounted cash flow formula valuation. So we will have to estimate the growth of this company for the next 5 years and then another 5 years. And we will make 3 estimates: the low, the medium, and the high one. So the low estimate for the first 5 years, 12%, and then 10%. Remember, right now they're growing much faster. Medium, first 5 years, 15%, and then 12%. And the high estimate, 17%, and then 15%. Okay, so let's see the valuation with such estimated growth rates. And as you can see, it is all green. When we look at the intrinsic value, we're somewhere between 147 and 225. But that is not the price we should actually be buying this company for. We always need to have a margin of safety, and I use a 30% margin of safety. What it gives me is a chance that if I am wrong with my estimates, then still I get extra 30% chance of actually making money on this investment. So if we apply a 30% margin of safety, the price we should be looking for is somewhere between 103 and 157, and the current price is $83. Of course, we have to remember that Thor Industries is a car manufacturer and it is a cyclical business, so there are ups and downs, and right now there are problems with semiconductors for the auto industry and the whole supply chain problem. So if you don't really understand the business, it's hard to know if this is the down of the cycle or is it the up. But looking at the price, it has fallen quite significantly in the recent months or even years. Well, it seems like this is a really healthy company with a problem with debt. So that's something to really consider. But the valuation seems really, really nice. So if Thor Industries is a company that you are interested in, then please do your own due diligence. Dig deeper into the data and try to understand this company, understand the cycle that it is in right now. And let me know in the comments, what do you think? Are my estimates right? Are they too high, too low? What do you think about the future of Thor Industries? So that's it for today. Thank you very much. I hope it was helpful. And if so, then please like it and subscribe if you haven't already. And see you in the next one. Bye bye.